Welcome to Fuller Speed Ahead. I'm Craig Fuller here with Drew Wilkerson, the CEO of RXO. Drew, how are you today?
Doing fantastic. How are you doing, Greg?
I'm doing great. RXO is a relatively new name to the logistics industry. It may be a name that if you follow Wall Street or have followed the story, you would know the scale is quite significant. You guys are, what, number three in terms of logistics and brokerage?
Post the acquisition of Coyote, we are the third largest freight brokerage in North America. And when you look at RXO's story dating back to when we were part of XPO, we've been one of the fastest growing brokerages over the last 15 years.
It's quite impressive. It's a name that not a lot of people who are sort of outside the, day to day, either watching what's happened on Wall Street or perhaps are inside the organization know. How did the name RXO come about?
When we did the spin out of XPO, we first started out of what are letters that make sense, and we look for things that are not already taken from other companies, and RXO was one that was available. And so when we looked at what that could stand out and what that could mean, one, we wanted it to be our ticker symbol, and then two, we looked at reliability multiplied by outperformance. And so for us, reliability for our customers, reliability for the carriers that we partner with, reliability for our employees is extremely important to us. And then when you partner that with, we're built on outperformance. I talked earlier about the growth of XPO's brokerage at the time. And from 2013 to 2021, we were growing 3 times faster than the overall market. And we were doing it largely organic growth. Over 90% of the growth during that time period was organically driven.
XPO is a big player. There was a spin out of multiple companies created these XO. Was there a big discussion about the legacy XPO name of who gets to retain it?
Well, if you think about it, XPO started out with what RXO is today. XPO's original vision was who RXO is today. And for us in brokerage and managed transportation and in last mile, we had a great reputation with our customers. And there were very, very strong relationships there. And so I fought hard to keep the name. In the end, rebranding a bunch of trucks and trailers was more expensive. So I lost out. I'll tell you, I'm very glad that I lost out because we've got now the identity of RXO where we're a standalone company. It's not coming out of the shadows. And it's very easy to tell our story to customers and investors of who we are now.
Was there an arm wrestling match over this, or was it literally just the cost of changing
I
out the
love
equipment?
Mario. I'm confident I could beat him in an arm wrestling match. So there was no arm wrestling match.
So RXO, you guys did a very significant transaction in Coyote, a company that UPS had acquired years back. I think it was 2015 when they made that acquisition. It had it was always an odd fit inside of UPS, a company that is known for parcel, known for global logistics, but not historically known for truckload and brokerage specifically. What has that transaction been like?
It's gone really, really well, Craig. There's 3 things that we always focus on anytime we're going through acquisitions. Number one is the people. And so for us, retaining the people and retaining the right people is extremely important. This is a people business first. And so for us, when you look at it director level and above, we've had like 2% voluntary turnover. And so for us, the top talent that came over is staying with us and they're more excited than what they've ever been. They're getting back into a growth mindset. They're part of a large scale brokerage where in a lot of ways, they're the crown jewel of what we do. A lot of the Coyote locations now are some of our largest locations. So there is a lot of excitement around the people. The second aspect is the customers. And, I talked about this being a people business. Customers are built off of service, solutions, innovation, and relationships. And Coyote had deep relationships with their customers. And so for us going in there and establishing the rapport with those customers and letting them know that we were going to service the business the same way or at a higher level than what we were doing before was extremely important to us. And we've seen some good wins from their current customers of growth in the current bid season that we're in. And then the last thing is technology. When you look at it, we were on 2 different systems. They had legacy Bazooka, which was a strong system, one that, was a very good operating system, especially on the carrier rep side. And we had Freight Optimizer, which you were a little bit sleeker, gave better customer visibility, There were some different tools in there. And so we elected to go with Freight Optimizer. And the last thing that you focus on is the integration of the technology and making sure that as you come onto one system, that you do that well and that your employees are able to be more productive. So when we did that, we looked at being able to build out the best of both worlds. And like you hear that all across RXO as we've come together as the new RXO now, of being able to take the best of both worlds. I talked about their Bazooka operating platform. They had some things on the carrier side that legacy RXO did not have that will make us a better brokerage, that will make our employees where they're able to do more loads per day, which will ultimately increase our profitability. Legacy Coyote will benefit from some of the customer tools that we had on our side that allowed us to have more automation on the customer side. So we've said that we'll have that integration complete largely by the end of Q3. And for us, one of the biggest synergies that you get out of this acquisition is the power of scale. But you don't get that until you get on one platform. And with the power of scale, we think that we will be able to significantly reduce our purchase transportation over time.
Now, Drew, I saw the Coyote transaction play out firsthand being in Chattanooga, Tennessee. Coyote purchased a company called Access America, which was at one point was one of the fastest growing businesses in the community. But after the UPS acquisition of Coyote, a lot of the people left because it was such a different culture. The freight culture and the very regimented culture of UPS just didn't seem like it was a great fit. Bringing back the Coyote team to sort of the basics of freight brokerage, that culture that we all recognize what it is, has that been a big difference for the team that stayed as part of that transaction?
It's a huge morale boost, for them. Whenever you look at going into somebody who eats, sleeps, and breathes brokerage like we do every single day, it's the crown jewel of our business. Somebody who thrives on the volatility in the brokerage business, even in a down market, to be able to go out and do an investment like the Coyote acquisition. There wasn't a lot of companies that are going to throw out the type of investment, $1 billion investment at the bottom of the market, like what we did with Coyote. And so for us, the morale has been up from the employees. The ability to be able to take more from their customers has been up. There's excitement about aligning compensation plans to things that matter most in the business for us. So, right now on the employee side, everything is green that we look at.
Yeah, that's amazing. It was always sort of hard to watch. Just UPS is obviously a fascinatingly successful company. It's a fantastic business model, but freight brokerage is this very strange industry for people that are outside the industry that just don't understand the culture elements and how important culture is. It all comes down to human capital in freight brokerage. What are you guys doing to look at the cultural elements just across RXO in terms of innovating around the culture that you're bringing to those folks?
Well, the first thing that we're doing is we're coming in and we want to win with our customers. And I think people want to work for a winner. People want to work for somebody that stays in growth mode. And so I think realizing the value that we put on sales, customer relationships is a differentiator for us in the market. And so for us, realizing that everything that we do, we're going to be entrepreneurial, we're going to be fast moving, fast paced. We have to move with the market. The market moves a lot. You have to be prepared for an inflection. You also have to be prepared for a downturn to pull down purchase transportation during those. So I think seeing the flexibility and the adaptability of the RXO team along with the Coyote team has been has been a big boost for morale. The second thing that I hit on earlier is you've got to make sure that people are incentivized to do what's most important to you as a business. And all businesses have different things that are important to them, but ours is a very simple business. And we're focused on volume, market share. We're focused on our overall margin, meaning the margin that we're doing per day. And we want to pay our people off of that. And aligning them to that allows them to go out there and stay focused on the first part of what I talked about. Focus on the customer, focus on the relationship, focus on the growth opportunities that we've got. And then the last thing is having a culture of transparency. We're not going to get everything right. But what we will do is we'll stand in front of you, we'll answer any question that you've got. We've got town halls across the organization a lot. I do them more than once a quarter. Our line of business leaders do them throughout the quarter as well. And our rules in town hall are very simple. You can ask whatever you want. And from that, I think building a culture of transparency, you build a culture of trust with your people, and people know, hey, times aren't always going to be great, but I know I can count on the company to do what they said they were going to do.
Drew, the original foundation of XPO was, built on this idea of consolidation of brokerage. That seemed like the real focus in the initial years of XPO. It shifted to really assets and international global forwarding, warehousing, stuff that really is either deeper asset investments. And was there a moment inside the organization where you became, or the organization leadership became aware that brokerage, the business model of brokerage, is different than perhaps some of the opportunities in the asset side of the business?
I think we always knew that. I don't think that we ever lost sight of that. We knew that they were very different businesses, that with how they operate, how they go to market, how they build relationships with customers. You look at the warehousing model, that's a long sales cycle, very long sales cycle, but it is typically multi years. You look at the asset base on the LTL side, and it's completely different than what we do from a broker and a transactional model where you're negotiating rates on both sides as you go through that. They were opportunistic things for us that created a ton of shareholder value for us at the time of XPO. But for us, we've never lost focus on what we were doing inside of what was part of XPO was North American Transportation, which became RXO. And for us, we were always focused on organic growth. And if we had the right opportunities for M&A, we wanted to be able to do that. And as we sit here today, there is still a lot of opportunity for organic growth, and there's a lot of opportunity for M&A. If you look at our brokerage, it's over $5 billion now of what we do in business, but we're still just a tiny piece of the overall market. And so for us, there's a lot of opportunity to go out there and take organic growth. And when you look at the overall freight brokerage market, there's 17,000 brokers out there. There's a lot of opportunity for inorganic growth with M&A and finding people who may do flatbed better than what we do, that may do refrigerated or LTL, or help us drive scale, like what the Coyote acquisition did by growing our volume by 120% overnight. When you're able to do those types of things through M&A, it's highly accretive for us as a company and for our shareholders, which is important to us.
It was interesting watching the foundations of XPO and sort of as the company was coming together. And I noticed it wasn't lost on me that CFI did not fit. The truckload asset operation did not fit into the acquisition model. It was an asset that was sold off pretty quickly, which was, I think, interesting. But it also, I think, reinforces what we've seen over the last 2 decades, is that brokerage, non-asset based brokerage, has continued to gain share, and owning large asset enterprise carriers is a very difficult business model. We're seeing this shift. How do you think about the market today in terms of asset versus non-asset? Is the opportunity, are we going to see more increased growth in terms of the large brokers playing a key role in those routing guides? Is your competition the large asset carriers, or is it really the other brokers that you're competing against?
It is both. And so for us, I've been doing this for a long time, Craig. I'm coming up on 20 years. And whenever I started in the industry, brokerage had, high single digits, low, mid single digits of the overall for hire trucking market. Today, to your point, it's over 20%. And I think we're still in the early innings of what that can be. If you look over the next 5 years, I think you're going to see brokerage go up around 30% of the overall for hire trucking market. Ultimately, I think you'll see it get in the 40s. When you look at the brokerage market now, it used to be the top 10 players. Now it's the top 9 players, make up roughly 50% of the overall market. And I think when you look at that, customers are looking to, right now at this point in the market, are looking to consolidate the number of carriers they're working with, and large, financially stable brokers who have good relationships, who deliver really good service. That's important. You've got to deliver the service, and can come out and deliver solutions with strong technology, are the winners in the market. When you look at what brokerage does, it's the flexibility model that they have that, an asset-based carrier doesn't have. And that's not a knock on asset-based carriers. We work with them every single day. But, as we're sitting here today, if you call an asset-based carrier, they've got to make sure that they've got a truck in the market if you've got something. For a brokerage, we've got access to over 1.5 million trucks. So we've always got an opportunity to find a truck for a customer. That flexibility comes in handy. When you look at building out solutions like drop trailers, whenever I started in the industry, that was not done by brokerage. And for us, we built that business out over a decade ago on retail and e-commerce customers of being able to look and feel like an asset-based carrier, but having the flexibility to move up and down off of a customer's needs of what's going on in their overall transportation network.
Yeah, I grew up in an asset-based family. I was always told that there would, at some point, be massive consolidation, and it would be the big truckload carriers. It seems like that story is, never going to happen. It's the opposite. It does feel like there's been some consolidation, or will continue to be some consolidation in the large brokerage business, but we're also seeing a fragmentation at the bottom, as it's very easy for small operators to go start their own brokerage. What do you think 5 years from now this looks like? Are we gonna see more consolidation at the top and more fragmentation at the bottom? Where does this all go?
Well, I can't predict what the small businesses would do because, to your point, it's not hard to start a brokerage. When you look at it, what is hard to do is be able to build a brokerage of scale, to go out there and look a customer in the eye and say, "Hey, I know I can do 100, 200, 300, 400 loads a day for you." There's less than a handful of companies that can do that and do that with confidence in the brokerage market. I think that you'll see more consolidation at the top, and I also think that you'll see some strong niche players who have developed, good expertise in different modes of transportation. Those make great acquisition targets, and they're highly complementary to what you're doing in the overall business.
When you're looking at M&A, are you looking at those niche players? Is that more attractive from an M&A opportunity versus sort of commoditized, standard, high velocity truckload?
We look at both, we really keep a simple approach to it. How is this a strategic fit? How does this make us a better company? How does this help us serve our customers better? What does this do for us from a carrier base that we're partnering with? What is the solutions that we can go to a customer and offer that we couldn't offer before? What is the synergy opportunity? Do we not need two technology platforms? And so for us, as we go through and we check the boxes, is what's the strategic fit, what's a cultural fit, and what's going to deliver returns for us as a company over the long term.
Is there a really a focus on unit economics of knowing that inevitably margins do get compressed over time, over a long enough time frame? Is there a focus on, okay, we've got to do handle more transactions per broker? Is that a big focus of it? Is just efficiency and operating efficiency?
Absolutely. We think we've got the best technology platform in the industry. And if you look again, 15 years into it, last quarter, we said that on a rolling 12-month average, our productivity was up over 15%. And so for us, our team is able to go out and do more. They're able to focus on building the relationships with customers. They're able to focus on what are solutions that I'm not thinking about that are not just tactical point A to point B that we could be doing different from a customer. There's always going to be exception management that comes up, but we want them less hunting and pecking on the keyboard, less clicks of the mouse to where they can spend their time truly focusing on the customer.
One of the emerging trends that's really, I think, an unfortunate reality of the world we live in is all the freight fraud that's popped up over the last couple of, really gotten bad in the last 5 years. And I think, theoretically, at least what I sort of ascribe it to is during the heydays of COVID, a lot of freight brokerages were offshoring the production, their operations, and taught a lot of people who then, when the market downturned, they got rid of, and what they were left with was a lot of folks that knew how to operate the industry inside the industry, but also didn't have the opportunities that they once had. And it created a lot of exposure. And of course, this stuff is sort of exponential. It grows like a virus. What are you currently seeing in terms of freight fraud?
You're right. You have seen an uptick in it over the last several years. And for us, you know, protecting our customers from that as much as we can is of the utmost importance to us. And we talk about it all the time of how we can do things differently. And so when you look at things of doing a lot of expedite shipments, a lot of just-in-time shipments, a lot of high-value shipments, you start looking at how you deal with the carriers a little bit differently. And, for a lot of brokers, and there's no knock on this, that you can sign up as a trucking company and go do business with them today. You cannot do that with RXO. You have to have a history. You have to be able to evaluate what's their safety record, what's their safe sat score, what's their current rating that they're running at. And so we want to do that over a period of time to where we can see how they operate as a carrier before we bring them on and let them work with customers. And even then, we're not going to throw somebody on to a high value load day one of theirs. We want them to operate within our network to be able to see how they perform. Do they allow us to track them throughout the life order of the shipment? If they don't, they're probably never going to haul an electronics load for us. So I think part of it is going through the carrier vetting process, and we're admittedly we're very stringent, and we're tough to do business with in the beginning because of protecting our customers is that important to us.
And so is this a tenure thing? If a carrier wanted to haul for RXO that had not before, is it do they need to be around for a while? Are there rules that you put in place that ensure some level of security?
That's right. That's right.
So it feels like tenure is really one of the most important
Yep.
factors. Um, the it strikes me that the smaller operators, these small brokers that don't have the sophistication, like you said, that are just willing to take anybody on, are the ones that are created in an environment where this stuff is propagating. But it strikes me that it doesn't benefit anyone where we do have freight fraud because ultimately as a shipper or as a, this stuff tends to build on itself. What is it you would like to see in terms of regulatory environment that would perhaps change the way that some of the small operators actually manage their freight?
Yeah, I don't know that I want to go too much into the regulatory side, but I think for us, I'd go back to what I said earlier. How do you protect the customer? And something that is an issue. What I would say on the regulatory side is we got to start by prosecuting the people that we catch that are doing freight fraud and people that are scamming people out of loads and stealing shipments. Is you've got to start with prosecution there and making sure that if somebody's a bad actor, that there's a consequence that is enough that people don't want to do the action on the other side.
Yeah, it strikes me that's probably the biggest issue is whose job is it in the government to actually manage this? What regulatory body is responsible for it? And who has the incentives to go after it? It feels like that's really the job of the FBI, but from what I've gathered is the FBI is sort of looks at this as an uninteresting crime. It's not one that they're going to get a lot of credit for. There's not a lot of public notoriety for breaking a freight fraud gang, even if they understand the scope of it. I will say, have what I've observed over the years is that the larger companies tend to have more resources, tend to get more response from authorities. I know at US Express, when we'd have a truck stolen, we had basically a response team. We had a guy who would address it and figure out where the truck was and the cargo was, and then you would sort of go about figuring out how to handle it. It strikes me that there is going to be a time where the companies that have the resources, shippers are going to prioritize those companies that can actually have the response because this is an inevitability versus the ones that don't have those resources.
Well, and again, it goes back to the financial stability of who they're doing business with. Can you pay the claim? As a large financially stable company, are you able to pay the claim that could come up from uh, cargo theft?
And are you seeing this in RFPs? Are shippers asking about fraud and asking about your response to those types of issues?
It is an ongoing conversation with the customers on a daily basis.
So you've now had your what 8 months, 9 months into the Coyote transaction.
Almost not there yet, but almost.
Okay, so you've long enough to almost have a baby. So
Yeah.
we're a couple of I think into the third trimester maybe at this point.
Yeah.
How would you say in terms of you guys have handled it? Is it operated the way you expected? Is it operating better? Are there more challenges than perhaps you've uncovered in that operation?
I think there's more opportunity that we've uncovered since this. We think purchase transportation is the biggest opportunity overall that we've got within the company. And when you look at the legacy Coyote team, I think the carrier reps that are on the floor, I think their average tenure is like 8 years. That's unheard of. It's probably one of the most, if not the most experienced carrier rep team in the country. And so the ability to be able to go out there and purchase transportation at a stronger sense, I would say, it's performed exactly like what we thought it would given the market. Now, we didn't necessarily get the market right, When we modeled in the acquisition, we didn't expect weather to be worse than what it was in prior year in Q4 and Q1. And so, they priced business a little bit lower than what we did in the last RFP cycle. And so their margins got squeezed more than what we anticipated, but it was all driven off of what was going on the weather and the squeeze that happened in there. So where it was at, and it's performed exactly like what we would have expected it to through a market, and it's positioned us now to, we closed it earlier than what we expected, to where we're able to go to customers through the RFP season as one company.
So, Drew, what has there been anything that surprised you that has been a bigger challenge than perhaps you anticipated?
I think the market was a much bigger challenge than what we anticipated. Like I said, we did not model in to get squeezed harder in Q4 and in January than what we did in prior years. When you're talking about retention of people, that is always hard. You're building relationships, you're building trust with people again for the first time, and something that's new. So you're having to talk to them about the values of the company that you're able to do. Getting in front of customers. Myself and the leadership team and the legacy Coyote leaders have stood in front of a lot of customers over the last several months, explaining to them what the new RXO is and the value for them as a customer. And so I think all of those are challenges. I would say that they were unexpected challenges, but they're really important to get right. And I didn't even mention technology of coming onto one platform. I would say when you look at the three big drivers, we're right where we thought that we would be or ahead in all categories, but we still have some wood to chop on getting onto one system.
Yeah, it strikes me that the folks with more tenure, because they've seen cycles. One thing I've observed in the last couple of years, particularly in 2000 and sort of 22 when the freight recession was first hitting, is there was a level of folks that hadn't been in the industry very long, and even some of the new players that hadn't been in the industry hadn't seen a significant downturn. I mean, the last major downturn in freight, while we've had episodic downturns of like 2015 that were pretty short lived, even 19 was short lived. The real big, massive downturn was 2008. It was really the tenured folks that actually were in much better position of understanding that this is a cycle and this business is cyclical. I would imagine that that's been something that has enabled you guys to thrive in an environment is that your people know that the pendulum will eventually swing because it's been quite painful.
They absolutely know the pendulum will swing. Both sides have an experienced carrier up team. Legacy Coyotes a little bit more experienced than Legacy RXOs, but the ability to go out there and purchase transportation is really about finding the right truck for the right load. And one of the things that we've done is while we're not on one system yet, we have run some pilots and we put some Legacy Coyote reps on Legacy RXO's system of Freight Optimizer. And we're already seeing the wins on that, hey, there's lanes where they're purchasing transportation better than what we were doing at Legacy RXO. As Legacy RXO starts to get access to Legacy Coyote's freight, we're going to see the same thing. So again, we think that is one of the biggest opportunities for us coming out of this acquisition.
So, Drew, I'd be remiss to ask, what are your views of the market? Obviously, this is the coldest winter. Just personally, you're in Charlotte, I'm in Chattanooga, Tennessee. It has been brutal here. I
Yep.
can't remember a winter in my life that it's been as cold, as bitter as this one has. But we've also seen it in freight data. Beyond the weather, taking that aside, what's your current view of the market?
I think we're coming off of the bottom. Now, what that shape of the recovery looks like, I don't know. But when you look at it, one of the things that we said was rates will be up, low to mid single digits on a year over year basis. We haven't said that in a really long time. You're seeing spot rates that are starting to go up. Carrier capacity exits are continuing, still at probably too slow of a rate, but they are continuing. If you look at load to truck ratio, is in a much better position than what it was a year ago. If you look at tender rejections, it's sitting around 6 to 7%. I remember when you first started the downturn, it was sitting at 0% almost. And so you're starting to see things move in the right direction to where I think we're coming off the bottom. I just don't know what the shape of the recovery looks like. Is it going to be something that there's something that triggers it, whether it's tariffs, whether it's taxes and returns, or whether it's a weather event that drives a V-shaped inflection, or is it going to be a slow stair-step recovery as we go throughout 25?
Yeah, it's hard. I've been public about my view of the market and the freight recession ending. I still stand by that, even though it hasn't been as sharp or as we haven't seen the tightening to the degree that I would like to have seen. certainly has been slower, but it's still, if you look at it over a longer time cycle, you mentioned at the low, I mean, we're at 2.5% rejections back in, in 2023. It strikes me that the market is recovering, largely due to capacity exits, but it's very painful. Everyone would like to see it happen faster. It does not appear that it's going to be a fast and a quick recovery. It's going to be quite painful, but I guess only the strong really survive that.
That's right. Demand can change things quickly, I would say. And then two, when you're at this point in the cycle and you're sitting there and you're coming off the bottom or you're at the bottom, it gives you opportunity to be opportunistic and look at how do you reshape the business, like what we did with the Coyote acquisition. The timing of this acquisition for us could not have been any better. We got it at what was the bottom of the cycle, and we're positioning ourselves better for the upturn. And so I think, we can't control the market, but what we can control is the actions that we're taking to make us a better company to serve our customers and serve shareholders long term.
Yeah, it feels like I had this conversation with somebody this morning who I have an enormous amount of respect for, runs a very large supply chain, in the materials business. And was interesting because he is very negative, obviously exposed to materials handling, housing, very negative about the economy, and is like the freight recession still going on. And he's pointing out Wall Street stock prices as the proxy. And I reminded him that actually trucking stocks were at a peak in 2023 at the depths of the freight recession. It feels like Wall Street is somewhat disconnected from where the freight cycle is right now. And so while we're seeing the stock prices be very sensitive to the overall market, the freight data is telling us something different. It's telling us it's not great. We're not seeing a bullish recovery, but there isn't anything to be alarmed about, I don't think.
Yeah, I think that anytime you're building an investor base, you want to look for people who look at through a similar lens of what you look through it on a length of time. And so that's trying to find the investors who are looking at things on a 3, a 5, a 10-year basis, and that they're long-term shareholders. And they're people who are going to challenge you on the way that you're doing things. They know the business well. They know it inside and out, but they're really looking at it through a cycle. It's not something that they're looking at of, what, am I trying to time it for the next 30, 60, 90 days? It's people who are looking at what is this business and what is the long-term earnings power of this business through a cycle.
It's hard to do that as both an investor and someone who's been in a public company. It's hard to look to disconnect yourself from the stock price, but I think you have to look at it over the long cycle. Is the business improving, and ultimately the market will catch up eventually. But it's hard to, especially in this environment where there's so many things happening in the public sphere, geopolitical, politics, just a lot of things that are changing the way our government's operated, hopefully for the best. We're seeing a lot of sort of changes of downsizing government. Certainly is going to have a toll, and it's going to change investor sentiment, but it shouldn't change the scorecard that people put on businesses themselves.
Yeah, no, I agree with you.
So, Drew, anything that you sort of predict over the next 5 years that maybe isn't on people's radar?
I think we've talked about a lot, Craig. I think when you look at the overall brokerage industry, you're going to see more consolidation. I think that as we look out over the next 5 years, we're not going to talk about the top 9 brokers having 50% of the overall market. We're going to talk about the top 3, 4, maybe 5 having 60+% of the overall brokerage environment. And I think that, companies that are financially stable, have good, long relationships with their customers, that have a history of creating solutions for them, are going to be the winners in that market.
Drew, you think we'll see more consolidation of those top 10?
I do.
So we'll look forward. Maybe there's an announcement sometime for you guys in the next couple of years. I know you can't talk about it, but
you never know with
look forward
M&A. You never know with M&A. And I mean, you have to, again, it's got to be the right fit. There should be a really high bar to clear on M&A. And so for us, there is a really high bar to clear on M&A. We do organic growth really well, and we haven't lost sight of that. But if there's something that makes us a better company, we're absolutely going to look at it.
Well, Drew, really appreciate you coming on today talking about the story of RXO, what you guys are doing. It's certainly an exciting story. Love to see the momentum, both on the M&A side, the consolidation side, but also the investment that you guys make internally in technology and in culture. I think it's a story that we'll continue to watch over the next couple of years.
Yep. Thank you so much for having me. Enjoyed the conversation today.
Yeah, appreciate it, Drew. We do have a freight fraud event coming up in mid-May. It's on May 14th. We're going to be talking about freight fraud that's propagating. It's in person in Dallas. You can get your tickets today. Please go and join us at this important conversation as we look at best practices to address freight fraud. We have leading decision makers and folks that are connected to this industry that are talking about how to mitigate this problem that continues to reoccur.